a break and retest strategy is that there's three phases to any market structure. We have an uptrend, we have a downtrend, and we have a sideways moving market. The way the market illustrates these phases come in all different variations, so it's very important for you to get familiar with the different patterns that you're about to experience as part of this strategy. So now what we're going to be identifying on an uptrend is how the market pushes to the upside, pulls back to the downside, continues to push to the upside, and pulls back to the downside. Now, in theory, we would all love for the markets to look like this every single time, but we know it's not going to happen every single time. Sometimes the market's going to push to the upside, it's going to pull back, it's going to create structure that doesn't continue up, then it's going to pull back, then it's going to go up, then it's going to pull back, and then it's going to go up, and then it's going to pull back, etc., etc. So this is something that you need to look out for. You need to understand that these are two different patterns. With this break and retest strategy, you're going to be focusing on clean price action. The next thing that you're going to be focusing on is monitoring how price breaks above a previous structure high. So in this instance, if the market is pushing to the upside, you're going to be identifying this as your structural high. Now, you don't want to buy the market until price has illustrated a clear trend. And that illustration will be represented by price breaking above structure, retesting structure, and then continuing to the upside. So what we're going to be focusing on today is how we can identify taking trades in and around these break and retest levels. You're going to be looking for clean structure that clearly illustrates a trend in market to the downside. You're going to be looking for price to break the previous structural low. And then you're going to be watching how price pulls back to these key levels for a retest and then look for these continuations. Again, the patterns to take these trades will be illustrated later on in the video. So this is what you're going to be looking for as part of this break and retest strategy. It's really, really simple. Now, if you don't know this already, the market creates structure with higher highs and higher lows and lower highs. Now, I'm not going to illustrate this in this video because it's something that most of you will already know. But if you don't know the terminology behind this trading strategy, then just understand the simplicity of it, which is simply waiting for the market in a downtrend to take out its lows and come back to this level for a retest before a continuation, and vice versa for buying opportunities. Now, I all want you to be aware of something. The only markets that you're going to trade is if the market is pushing to the upside or the market is pushing to the downside. If the market is moving sideways and you do not identify a clear directional bias, then guess what you're going to do? You're not going to trade in this market. The habit of a trader is to create a story that doesn't exist, and that's what leads to very bad trading opportunities, losing a lot of money, taking trades you shouldn't be taking, etc., etc. So any market structure that is moving sideways, you are not taking any trades. Only if the market is clearly identifying an uptrend or a downtrend is when you will go into the markets. The next thing you need to understand is the phases of the market. So what we're going to be focusing on when taking our trades is identifying an exhaustion phase, then the patterns that we require to take that trade, and then take a trade in line with a trend to the upside or downside. And this phase is what we call a continuation phase. So when the market is pushing to the upside, you will see the market pushing up like this. This is what we call a continuation. When the market is pulling to the downside, this is what we call an exhaustion. You're going to be focused on taking trades in this area here, when the market is clearly identifying that the exhaustion is over. Once the exhaustion has illustrated the patterns you will learn today, then you will take your trades in line with the direction of the trend as part of the continuation. This also applies to a downtrend. When the market is pushing to the downside, this is what we call a continuation. When the market is exhausting, this is what we call an exhaustion phase. This is where you're going to be looking for your trading opportunities in line with the direction of the trend once you learn the patterns that you will learn today. You will take your trades then as part of a continuation back to the downside. So in its simplest form, you will be focusing all your attention on identifying the exhaustion phase so that you can continue trading with the trend when it starts to continue in the push phase, or as we called it, the continuation phase. So let's take a look at two patterns that you're going to be identifying as part of this break and retest strategy. So just a recap, you're trading with the trend to the downside or upside. You're looking for the market structure to pull back to create an exhaustion phase, and then you're looking to take a trade once the market illustrates a retest of previous structure. Once the market has illustrated this exhaustion phase, you are looking to take this trade as part of a retest continuation push phase so that you can continue with the trend to the downside. If the market is pushing to the upside, you are waiting for the market to identify a break of the previous structure, a retest of that structure in an exhaustion phase, identifying the patterns you would learn today, and then taking that trade in line with the direction of the market as a push phase. If the market structure is moving sideways and not highlighting or illustrating any clear directional bias to the downside or upside, you are avoiding taking trades in this direction. So let's take a look at pattern number one. So here we have pattern number one. Now, I want you to identify what is happening in and around this area. You can clearly see that we have a strong push to the downside. Now, this is coming off of the back of an uptrend. So this means that the market is pushing to the upside. With this market pushing back to the downside, we call this an exhaustion phase. So this just simply means that the market is resting in an uptrend, pulling back for whatever reason. Don't go into too much details about it. Just focus on the patterns. And what you're looking for the market to do is show strong bearish candles to the downside in line with the trend that should be up. And then what you're looking for is for the market to create indecision. This indecision is clearly highlighting that the market is depleting in this bearish pressure and more likely to continue in the overall trend, which is the upside. Once you identify this pattern, you are then looking for the market to create this candle here, which is a strong push to the upside with a wick rejection. This clearly highlights that the bears tried to push the market down, they failed, and then the bulls came in with a strong push to the upside, closing strong, bullish, in line with the trend that is up. This is the first pattern. The second pattern that you're going to look for in an uptrend is the market exhausting. So this is coming off the back of an uptrend. You can see the market is pulling back or exhausting. And what you're going to be looking for is for the market to create a cluster of wick rejections. This is clearly indicating that the bears pushing this market to the downside are depleting, and there is a lot of bullish pressure stepping back into the market with the overall trend to the upside. So this is your second pattern. So this is for a sell bias structure, so a trend to the downside. This is the market pushing to the downside, and this is the exhaustion phase. Again, similar to what you just saw in an uptrend, you're now looking for these similar patterns in a downtrend. You're looking for strong bullish candles to the upside against the trend, and then you're looking for indecision candles to show a depletion in this bullish pressure. This depletion is in line with the bearish structure, and then you're looking for a strong wick and a candle to the downside. The next pattern we'll take a look at for a downtrend is the market pushing strong to the downside. This is in fact the exhaustion phase, and what you're looking at here now is multiple wick rejections indicating strong bullish pressure to the upside, but with the overall trend, this bearish pressure representing that the bears are taking back control of this market. So they're the four patterns. In fact, they're two patterns, two for a buy bias market and two for a sell bias market.